preservation. That's the big story in Germany. To what extent does that generate or increase the potential downside risk for that particular sector, and really impact on the sort of theology behind wealth preservation in Germany? Does it still make sense as an outside investor? If you're holding these assets, does it make sense to continue maintaining that hold?
I think if you buy core now in Germany, you really have to look on your NOI to see if there's any improvement. So I do not believe that the yields where they're at now, the tendency that they're going to release is higher than that they're going to continue depressing. Hence why look at your NOI. If you're not buying NOI now, your exit is always going to be closer to 6 than it is to 5 looking forward. So you need to make sure that your leases are competitive and on a long term, on a renegotiation period, either have room to go up or at least to remain stable to keep that preservation there. It's not going to offset one-to-one the potential risks of a release. And that's coming back to when bonds start moving back up in the other direction, where's that pressure of yields going to be? And if that wall of money starts going back into the US and moving into capital markets again and releasing of that defensive mechanisms that we have at the moment, then of course there's going to be pressure on those very high historic yields that we're looking at again. We're not into 2006, but of course the higher those or the lower those yields drop, the higher the chance they're going to be that they're going to release upward only in one direction. But we're not in that phase yet. But it's look at your NOIs, look at your cash flow. That's if any growth is going to come out of it, it's going to come out of your NOIs.
The question is always, what's the alternative?
If you have real estate now, if you sell at a good price, what do you do with your money? That's one question. The second question is, without going back to the Morgan Stanley story, but there is a financial element to this. Lock in these attractive interest rates, for 10 years. I'm pretty certain. I don't have a crystal ball. I'm pretty certain we're not going to have interest rates of, including a margin of 2.5–3% for the next 10 years. And if you have a yield of 4 or 5%, in a big city, in a good location, that's a pretty good deal to me. And I don't see that changing. So, if you have an opportunity to get the property, get the financing, I would do it.
Are there opportunities to lock in interest rates for 10 years?
Yeah, you're good.
Allianz is one example, but that's an example we hear a lot.
Yeah, as I said originally, it's a question of LTV. If you have even 60–65% with a good tenant, 10-year lease, you get 10 years financing at 2.5–3%. And not just at Allianz, all the big Landesbanken and some of the private banks, they offer those type of financings.
Again, on the core assets, there isn't an issue. And of course, even in B locations with a good connection and a high equity rate, you will get a finance, just in case that came across wrong earlier. But it's the core assets that they're all looking for. It's the highest margin play for the banks. It's the safest bet. And of course, looking down 10 years, I doubt we'll be looking at the interest rates that we have. So you're absolutely right.